Alright, I wanted to recap the two trades that I took today on paper, but they were pretty clean using my model, which is the Swiss model. So let's mark out market open here. So market opened at 9:30. As you can see, we had pre-market accumulation. If you don't know what AMD is, or accumulation manipulation distribution, I recommend that you watch any YouTube video about it. AMD, Power of 3, whatever, it's basically the exact same thing. PO3 is just using hourly opens like 10 a.m., 2 p.m., shit like that. So before pre-market, we had accumulation, and then we had, let me see here, we had manipulation. As you can see, we have this 50-minute right here. We wicked inside the 50-minute. We're respecting the consequent encroachment of it. And then what we did after is we made a move higher, right? So we accumulated, manipulated, and then shifted structure to the upside. We were targeting these equal highs, and then we had a retrace, and then I waited for the macro to open, right? So the macro is from 9:50 to 10:10, and then there's 11:10 or 10:50 to 11:10, sorry. So basically what the macro tends to do is, if we make a fair value gap, which is this one right here, we tend to, after the macro opens, is retrace into it and then go to the draw on liquidity. That's if the macro didn't make a fair value gap during the macro. So if the macro started here and we made a fair value gap, we would respect that. But since the macro didn't really make a fair value gap, we retrace to the ones that were before, a few minutes before. Some people say the macro starts at 9:45. I like to make it 9:50, so it's like highly probable, right? So as you can see, we tapped it before the macro started. As you can see, we wicked into it and then distributed higher. But since the macro opened, we had this push down, right? And then I longed, I think it was this candle or this candle, but paper trading was like kind of tweaking. So I entered on this up close candle, right? Because we're respecting a fair value gap during the macro, and we're having bullish displacement. So we had a move up right here, and then we went down. We had 10 a.m. open, so open high low close, open low high close. So we had a move higher, and then after we made basically what my model is after we make an internal high, retrace, and then go back to it, that would be my break even. So I had my stop right around here, but we were respecting this fair value gap right here. So we respected it, made a move higher. So why I was wanting longs is because I wanted this 4-hour unmitigated fair value gap. So this was it. So we had a market structure shift, or just a continuation on the 4-hour. So what does price do? We take external liquidity, make an internal fair value gap, and then price is going to respect it and then drive price lower. So as you can see, we had kind of an accumulation manipulation. On the 1 hour, it might be more clear. Also, we have this low resistance liquidity that's driving the move lower. These are all buy stops right here. So this was the draw on liquidity. So now after we took it, we should expect shorts, right? Because on the 4-hour, we're bearish since we are respecting the 4-hour fair value gap. So if we zoom in here, so the macro started at 10:50. So after we tapped, we had kind of like choppy price action right here. We were respecting this fair value gap. We were respecting this fair value gap. Boom. The macro opens. Did the macro make a fair value gap right here after it opened? Yes, but later on. Did we have a fair value gap before it that already got respected? Yes, it was this one. So what does price do? We tap a higher time frame gap. We close below. We make a fair value gap. We respect it. Macro opens. We go retrace, respect it again, and then go lower. What happens here? Since price is moving lower from the 4-hour fair value gap, we close above a low, we retrace into the fair value gap and go lower. So you just need to see what price is delivering off of. So for the long example is we're delivering off a 50-minute, so we're bullish. Where are we going? We're going to a 4-hour. After we fill the 4-hour, we should be delivering bearish, since it's a bearish fair value gap. And what happens after we deliver from a bearish fair value gap? The macro opens, it makes a fair value gap, and if it doesn't, it takes the one that was made a few minutes before. Okay, and then it delivers price lower. So yeah, that was it. People say today was pretty choppy, but I didn't think so. It was, but the delivery was still on point. Like the algo was just, this is what ICT has been teaching for years. This is exactly it, right? So I hope you learned something from this video, and thanks for watching.